Hey y'all, so what the heck is going on with the banking sector? So I'm going to jump into this really quickly. It's kind of casual today. I was planning on working from home and not working too much because it is spring break, but there's too much going on to not get an update out. So what the heck is going on with Silicon Valley Bank? So let me break Silicon Valley Bank down a little bit and then talk about the consequences it's having throughout the rest of the industry. This is going to be a long video. I'm trying to keep it short, but it's kind of a big deal. So Silicon Valley Bank is in Silicon Valley. It was like the 16th or 18th largest bank in the US, billions and billions and billions of dollars in deposit. The problem that Silicon Valley Bank had is that they were heavily invested in Silicon Valley, meaning they were an investment bank and they would lend money out to other tech companies and startups. But what they would say is, if we're going to lend you money, you have to deposit all of your money with us. You have to use us as your primary bank, which is probably a good idea as a bank, but a problem when they struggle. So Silicon Valley and the tech sector have been struggling. A lot of these companies that they invested in have been struggling. When a company struggles, they take out some of their assets to fund other operations of the business. Okay? So what happened in 2010 with the Dodd-Frank is a few things that are causing this. Not saying it's bad things. Those are all good things, but sometimes good things have unintended consequences. So one of those things was capital requirements. A bank is required to keep at least 10% of their liquid deposits for the amount that they have lent out. So for example, they lend out $1 million, they have to have 100 grand in cash. They lend out $10 million, $1 million in cash. $100 million, $10 million in cash. This company had lent out billions and billions and billions of dollars. So they would have to have a ton of money on deposit. Well, these tech companies have been struggling and started withdrawing their deposits, affecting that ratio. The other thing is when Dodd-Frank was established, we didn't use our phones the way that we did from an app-based standpoint. Now every bank has an app and it's very easy to withdraw funds. If you wanted to take money out of your bank in a large amount, you would typically have to go into the bank and do that. Well, now it's very easy to transfer the money out. So Silicon Valley, tech sector, all these people start hearing about the bank struggling and they just start transferring money out of their bank accounts to other banks in a very unprecedented manner. An old-fashioned run of the bank, the Federal Reserve comes in and has to shut the bank down. So what else is happening in the financial sector right now? Well, some other banks are struggling. And it's a little bit of, I think, maybe blood and water. We got short sellers seeing opportunities, but also just concern in people transferring money out for two purposes. One, concern, but two, to get a better return in high yield savings accounts. And that's been happening a lot recently. With the Federal Reserve raising the federal funds rate so high, treasuries are high, and it actually makes more sense to go throw your money in a treasury or an I-bill or a high interest savings account as opposed to your bank. And this is impacting, once again, those ratios with those banks. People are pulling money out over fear and they're pulling money out over opportunity in an unprecedented amount, which is dipping into that ratio level and causing havoc in the banking sector. Okay. The Federal Reserve is jumping in today. They're having an emergency meeting. It's going to be really interesting to see what the Federal Reserve does. They need to act to slow this down. Benefit? Interest rates are way better. The last 2 trading days, interest rates have gotten at least 0.5% better. And if this can hold, it's a good thing for mortgage interest rates. Bad news in the economy. It's my dog. Bad news in the economy is always really good for mortgage interest rates. So more updates coming. If you have any questions, please reach out. Have a blessed one, y'all.